All right, good morning, everyone. It is 8:31 in the morning of October the 11th, 2021, Eastern Standard Time, and this is my trading strategy session. So, first thing that we're looking at right here is the daily on CCXI. And I'm starting with this one. Usually I wouldn't start with a continuation play, but I'm starting with this one because it's going to lead me into the strategy on the next stock that I'm looking at, which is Ptgx. On Friday, CCXI gave me a really difficult time, and that's because I attempted to trade it as a momentum trade rather than as a gap trade. Now, in both instances, momentum and gaps, there's going to be a gap from the previous day's close. It's just that with momentum, you're looking for breaks of the last high, usually a break of the on a pullback, typically a break higher over the previous candle's open if there's a pullback. And it did not trade with momentum. Instead, it very much traded like a gap, large cap gap trade, which is it'll open up higher, it'll sell off, it'll dip down into one of the Fibonacci levels, and then it'll run up from there. And I was under on this trade on Friday big time. I was down quite a bit of money. Unfortunately, he managed to pull out a win on this thing, but I really had to kind of suffer through a lot of downward movement. So let me pull up the Fibonacci here, and the Fibonacci you'll see is from Friday's opening price down to its previous closing price. And this thing, if I'd instead of approaching it like instead of trying to approach it like a momentum trade, if I had approached it as a large cap gap trade, I mean, it only has 69 million shares outstanding, so it's not really a large cap. But anyway, if I treated this thing like a gap trade, you can see here between 31.22 and 21.09 or 29.01. It found its bottom right there between the 61.8 and the 50, and then took off and went the other direction for almost the entire rest of the day. It did get to a high here, 40 something, and then pulled back down to 38 toward the close. But anyway, so today on this one, I'm not looking for continuation. If continuation occurs on this one, then I will play it. Now, pre-market here, let me take the fib off, and you can see I've got some levels here. There we go. Okay, so there's the previous day's close at 38.41. That's a target. This is the previous day's open at 36.98. And then I've got, the previous day's high, right? So I have alarms at 36.98 and at $40.90. So if it starts dipping down below its previous day's open, I'm going to look for support in here, and I'll probably use like the 75% level that I like to use, because it's coincidental with this 75% level is coincidental with the 200-day moving average, which is at 33.79. I like coincidences. The more sort of coincidences you have at a price level, the more eyes you have on that price level. So some people might be watching the 200-day moving average. I don't like to use the 200-day moving average for a trade level. I only like to use it to identify the trend. And so you might get some people who are trying to trade the 33.71, or I'm sorry, 33.79 200-day moving average. And if that coincides with roughly the 75% level, then, you just get that many more people who are looking to participate. So we'll see how it goes today. This isn't my top pick of the day. This isn't the stock that I'll be watching most closely today. but it is up on watch. So that sets us up for Ptgx here. Now Ptgx has an announcement that isn't quite as bullish. CCXI actually had a drug approved by the FDA on Friday. And that's part of why I wasn't willing to let it go on Friday as it dipped down. I had 500 shares. I had gotten into it like $36.24. And I watched this thing go against me by over $7. And normally I would have cut losses much sooner. I was just like, there's no way this stock is going to gap and crap on an FDA approval. So anyway, Ptgx though, now this thing, let's see, I think I put it in my notes. Yeah, FDA removed a clinical hold on rusfertide clinical development. Yeah, it's good news. Let's go to the daily and kind of clean this up a little bit so it's easy to see. Let's see, let's get the fib out of the way. We'll leave that brush mark. We'll get the horizontal ray out of the way. So basically what we can see here is back on either the 16th or the 17th, the FDA put a hold on Ptgx's clinical trial or whatever it is, and the stock dumped big time from, let's see, a close at roughly 45 on the 16th to an open of 20, so a drop of about $25 per share. Now, on this morning's news that the clinical trial is back up on, back up and running, it's gapped up, I don't know, probably close to $15 here. Yeah, $17. So I have a level. I will look back at it, and here it is in the pre-market at 35.12, and it's in this consolidation area. There's a little bit of an area of consolidation right in here. And looking at the bottom of this consolidation area is where I get this level of support and resistance at $33.58. Will that hold? Will that be significant? I don't know. We'll see. If today the price drops down below that level, tests, and then drops down again further, then there's no trade. But if it comes down, hits that level, and moves away again, then it will be support, and there will be an opportunity to buy right there. Now, there's also, I have a Fibonacci on this thing. So let's go here to the 10-minute. And so I'll move this Fibonacci, according to wherever the price opens. This is the 10-minute. And so if this thing's going to move up, I imagine that it's going to behave somewhat similarly to CCXI, in that there are going to be people who are going to be like, I'm taking profits. If there are people who bought back in here when it was down in the high to mid to high teens, then there are going to be people who are going to take profit after the open. So I don't have as much confidence in this one as I did CCXI, because CCXI was actually a drug approval. This one is just clinical, a lift on a clinical trial. So, I'll probably look for the 61.8 and 50% fib entries and see how it goes from there. I could be wrong. This thing could open up and take off, but we'll see. We'll see what happens. You can see actually in the morning here, it's actually made a little bit of a pivot right here at that $33.58 mark. We'll see if it holds during regular hours. We'll see what happens. Okay, BNO. So BNO is one that I've been averaging into. I have 5 contracts on BNO now. Actually, I have 7 contracts. This is kind of funny. I have 7 contracts on BNO, but for whatever reason, I clicked. I started accumulating. Let's see, right here and right here. And then again on Friday, right there, I started accumulating contracts on BNO for, it's a bullish behavior. And so I was buying the expiration is the 21st of January with a strike of $21. And for whatever reason, on either this day or this, I think it was back here on October the 6th, on this pullback, I accidentally bought two contracts that expire on the 21st of January, but a strike of $24. That's a bit higher than I'd like to be in. I don't know if within 3 months BNO is actually going to get anywhere close to $24. And I don't know that the price action is going to be bullish enough for those contracts to appreciate. But we'll see. You know, we'll see. It may have. I don't know why when I selected my price on this thing that I selected 24. But anyway, so I've got 5 contracts that expire on the 21st of January with a strike of $21, and I've got 2 contracts that expire on the 21st of January with a strike of $24. So today, this morning, it's gapping up over this $21.98. $21.98 comes from way back here on the 7th of January or 6th of January, that time frame. And that was the peak before, you know, we went into the lockdowns. And so I kind of thought that it would have a little bit, I thought it would take maybe a couple more weeks for it to break up over top, to pop up over top of $21.98. But it looks like it's going to gap over this morning. And so what I'd like to see on this is for it to gap up, and I'd like to see it just keep going. But I mean, I doubt that's going to happen. What I think is going to happen is it's going to kind of gap up. It's either going to come down and test it like exactly, maybe even break below, or it's going to come down close and then move away again. I seriously doubt that it's going to come down and just break down below and keep going below. I mean, I just doubt that's going to happen. That's just not the way things are moving right now in oil. So, yeah, as of right now, I am looking for this to, probably come down a bit today and then continue moving higher. And then going forward, I will be looking for any little pullback, anytime there's a red day, I'll be looking for, and we might get 2 consecutive red days, who knows. But I'm buying on red. So, and until the trend changes, that's what I'm doing. NNVC started popping up a little bit today. There was an announcement on NNVC. This is one that I've been keeping my eye on. It's nanovirusides, and they announced a successful candidate for a pan-coronavirus antiviral treatment. And what that means is that, this recent COVID-19 was another form of severe acute respiratory syndrome. There's there's SARS and MERS, and I think even the swine flu may have been coronavirus. Well, NNVC just announced this morning that the clinical drug candidate is successful at treating pan-coronavirus, and they're preparing an application for human clinical trials. So this thing has some time. It's preparing, for human clinical trials. I mean, it can happen pretty quickly. I don't think they've gotten a breakthrough designation. There's another company I've been paying attention to that got a breakthrough designation. I'm going to have to go back into my notes and find that one out. But essentially, this thing, I think there's still time, and I like to average in after a pop-up like this, and here's the 0 to 25% right here. I like to average in this area right here. But I think this thing still has plenty of time, 6 months to a year. So I'm not in a big hurry. If it pops up today, that's okay. But I think, it still has quite a bit of time to sort of wallow until, people will forget it, traders will forget about it and stuff. And so there's quite a bit of time down here to average into a position on this thing. If it gets an FDA approval, then, it'll do something similar to what CCXI has done, or a lot of drugs once they get an FDA approval. I mean, they really take off. Okay. Now for the broader market, I've got some other things on watch. Baba, Love, AFRM, yeah, I'm just watching. I'm in a position on AFRM. I'd really like to see it break above 146.90, and then mRNA. I am bearish on mRNA. In fact, actually, if it opened up right now, I think it would open up below a level here. Let's take a look. So I have 302.46 on the bid on my level 2 and 303 even on the ask. Let's take a look here real quick. So mRNA is a vaccine developer. It's dropped in the past, let's see, since 23rd of September, so it's only been 2 or 3 weeks now. Put in this drop. Ouch. 36% drop from top to bottom right there, and it's putting in a bear flag, starting to build a sort of a bear flag, and resolution is to the downside. So I'm looking for opportunities to average into a short position on mRNA. I have an alarm on Merck. Merck announced its pill 81.67. That's higher than its previous open. Previous open here was at 81.67. So it just broke it in the pre-market. We'll see what happens. I don't know. I'm just kind of keeping this one on watch too. I don't know if I'll trade it or not. All right. So then what else? Yeah, mRNA. Looks like it's putting in a bear flag, looking for opportunities to short it. So, okay. NNVC. Yeah, Baba's one that I had from way back here. This thing put it in a textbook, head and shoulders pattern, but I had to get out of it. And actually, it performed. This is an ideal head and shoulders pattern. It doesn't get much more ideal than this, actually. I made money on it, but I didn't make a heck of a lot of money on it because it was put on this possible list of companies that were going to be canceled from the exchange. Like the U.S. wouldn't, we were going to like essentially boycott it. But as soon as that came out, there was no way. It was a win-win such a situation for the stock, because if it came out that it didn't get put on the no trade list, then it was going to catch a bid and rally. And if it turned out to be on the no trade list, then there would be a whole bunch of people who would have to get out of their positions in the United States, and there were a lot of people short of this stock, and so it would probably squeeze. And then I wouldn't be able to do anything with it anyway, even if if it were in my portfolio, then I'd have to, I don't know what I'd be able to do with it. So anyway, textbook short. I've forgotten where I got this level from here at 158.57, but it's acted as a little bit of support and resistance. It's gapping up. Baba is gapping up right now to 170. I just have it on watch. If it comes back down here and successfully tests 158, then I'll look for a long position in Baba. All right, the broader market here. The broader market it's looking pretty bearish right now. So the risk range that my hedge fund consultancy company has is at a high of 14809 on the NASDAQ and a low of 14265. That's the risk range. And so I don't know what that looks like. I mean, I could dig up the Qs, but I don't know what that range looks like on the Qs. So as of right now, the NASDAQ is above its risk range, which means that there's a significant ratio that there's going to be downside today on the NASDAQ. Same thing with the SPX. So let's see the SPY. I mean, as it stands right now, I did the math on this one here. Let me pull up the calculator. The SPX. So if 4426 I don't know if this is big enough to see. I don't know. Well, all right. So essentially, there's a 2.9. Long story short, is there's a 2.9 to 1 ratio that today is going to be a down day on the S&P 500. So yeah, in the Russell's actually kind of in the middle. It's kind of 50-50 if it opened right there where it is right now. And the IWM, yeah, the IWM is pretty flat on the morning. So let's go over to the SPY here. This is roughly the SPY is roughly 1/10 roughly of the S&P, and so if we hit the low end of the range on the S&P, we're looking at 428 roughly, maybe even a little bit lower. I've forgotten exactly what the difference is or what the ratio is there. Vix is elevated. This is kind of what was anticipated for this time of year and for the current environment. Earnings are coming out. I think that earnings are supposed to be really good, but there are a lot of people who are a bit bearish on it. But anyway, earning or the VIX is going to be elevated, and an elevated VIX means pressure, downward pressure on the broader indexes. Bitcoin has really turned out to be an alternative investment to the market. A downward VIX is a bit positive here for Bitcoin. The dollar, let's see, the dollar's, the flight to safety is, the dollar is considered safe. So, a bullish dollar kind of means, people are going to cash. They're, getting their powder dry. They're waiting for the market to finish doing its whatever, downward move. And whenever that happens, I don't know exactly. But yeah, people are going to cash here. So the dollar's gaining some strength. And it looks like Bitcoin, people are like, well, I'm not doing anything. If I'm going to go to cash, let me, put my cash somewhere where it might do something. And it looks like Bitcoin is that place. So, all right, everybody, that is my morning strategy session. Watching CCXI, Ptgx, I'm going to trade it as a gap trade rather than a momentum trade. I could be wrong, who knows. BNO, looking for opportunities to buy the dips on BNO. NNVC, just kind of on watch, just kind of checking it out. I don't think it's really going to do much today. It popped up a little bit this morning, but I don't think it's really going anywhere. Okay, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at the recap. I am out.